Welcome back, everybody, to another deep dive
Yeah.
into some fascinating financial documents.
I know.
This time we have a stack of papers
Yeah.
about L&T Finance Ltd,
Okay.
formerly known as L&T Finance Holdings Limited.
Right.
And we're going to be looking at their performance for the quarter ending September 30th, 2024.
Right.
So we've got board meeting outcomes,
Uh-huh.
financial statements,
Yep.
auditor reports,
Oh,
even a report on their compliance
lot.
with financial covenants.
Right.
So a lot to unpack.
It is.
But that's what we're here for,
Yeah, that's the fun part.
to try to decode all this financial jargon and
Yeah.
figure out what's really going on.
Exactly. You know, these types of reports are pretty standard for
Yeah.
publicly traded companies in India.
Mm-hmm.
They're all about transparency for investors and regulators.
Yeah.
But as you said, they can be pretty dense.
Yeah.
So we'll try to cut through all that noise and
Yeah.
help you find the good stuff.
So let's start with the big picture.
Okay.
L&T Finance Holdings reported a total revenue
Uh-huh.
of 7,803.74 crore
Okay.
for the 6 months leading up to September 30th, 2024.
Right.
Now, I don't know about you, but
Yeah.
I'm no math whiz.
Sure.
But that's over $1 billion US.
Right.
So that's a lot of money.
It's a lot of rupees.
Yeah, a lot of rupees.
Mm.
What I find really interesting, though, is that this figure
Yeah.
includes revenue from all of their subsidiaries.
Oh, that's a key point.
Yeah.
You see this revenue figure.
Mhm.
It's not just from L&T Finance Ltd, the parent company.
Okay.
It's actually a combination of all their subsidiaries.
Oh, I see.
So we're talking about
Yeah.
L&T Financial Consultants Limited
Mhm.
and a whole bunch of others that focus on these infrastructure investments.
Okay.
So it gives us a sense that L&T Finance Holdings
Yeah.
is more than just your typical loan company.
Okay. So they're kind of
They're doing a lot.
a bigger player than that.
Yeah, they've got their fingers in a lot of pies.
All right. So they're involved in various parts of the financial sector,
Mm-hmm.
and their revenue has also increased year over year,
Right.
which I would assume is a positive sign.
Yeah, generally speaking, that's a good thing.
Okay.
But, you know, revenue alone
Okay.
can be a little misleading.
Really? Why?
It's like,
Okay.
imagine you're running a lemonade stand
Okay, I like that analogy.
and you sell twice as much lemonade.
Mhm.
You're bringing in more money, right?
Yeah, I mean, you're selling more.
But what if the cost of lemons went way up?
Oh, I see.
You might not actually be making more profit.
Got it.
So to really understand L&T's financial health,
Yeah.
we have to look at both their profits
Mm-hmm.
and their expenses.
Okay, that makes sense. So let's talk about the profits then.
Let's do it.
The consolidated profit after tax for the 6 months
Uh-huh.
is 1,381.93 crore.
All right.
Again, over 200 million US dollars.
Wow.
Quite a lot of money. And a significant increase compared to last year.
That's great.
But
Yeah.
what does this profit figure actually tell us?
Well, it includes their share of profits
Okay.
from these associate companies and joint ventures,
Okay.
which, you know, again, kind of points to this
Yeah.
interconnected business model.
Right, right.
But to get the full picture of their profitability,
Yeah.
we really have to dive into the expenses they had.
Okay, so looking at the consolidated statement
Mm.
of financial results,
Yeah.
there's one figure that really jumps out at me.
Okay.
Finance costs,
Uh-huh.
2,827.69 crore.
Oh, wow.
That's a massive amount.
Yeah.
What are finance costs?
Well, finance costs are basically the cost of borrowing money.
Okay.
So for L&T,
Mm.
this is mainly the interest they pay
Okay.
on the money they use for their core business, which is lending.
Okay.
So they're basically taking out big loans themselves
Wow.
to fund even more loans to their customers.
Oh, so it's like a
It's like a cycle.
cycle of loans. That's interesting.
So it makes sense that a lending company
Right.
would have pretty big finance costs.
Yeah, especially if they're trying to grow.
Exactly.
Now, another item that caught my eye,
Mhm.
impairment on financial instruments.
Okay.
Now, that sounds kind of intimidating.
Yeah, it sounds a bit scary.
Can you break that down for us?
Yeah, so it's actually not as scary as it sounds.
Okay, good.
Think of it this way.
Yeah.
When L&T lends money,
Mm-hmm.
there's always a chance that some borrowers won't be able to pay it back.
Right, of course.
Impairment on financial instruments is
Mhm.
basically their estimated loss
Okay.
that they expect to have on those potentially bad loans.
So they're kind of setting aside money.
Exactly.
Like
For
cover.
potential defaults.
Exactly.
Okay, so it's like a way of accounting for the risk
Yeah.
that's part of their lending activities.
Yeah.
And if that impairment figure is increasing,
Right.
that could be a sign that
Potentially.
they're facing challenges with loan quality. Something to watch.
Okay.
It's definitely a metric that analysts and investors keep an eye on.
Okay, before we move on from this consolidated picture,
Yeah.
there's one other detail I noticed.
Okay.
L&T Finance Ltd. allotted a large number of equity shares to their employees.
That's interesting.
Yeah. What's the significance of that?
Well, by giving employees ownership in the company,
Yeah.
it could be a way to incentivize them
Yeah.
and tie their compensation to how well the company does overall.
So it's kind of aligning everyone's interests.
Exactly. It's a way to keep everyone motivated.
Okay. So it's not just about the numbers on a balance sheet.
Right.
It's also about how the company operates and motivates its people.
Mm-hmm.
Now let's shift gears a little bit
Okay.
and go from the consolidated performance to the standalone performance of L&T Finance Ltd., the parent company.
Like looking at their individual report card.
Yeah, like their own personal performance.
Yeah. Separately from the group.
Exactly.
And from what I see,
Yeah,
they seem to be doing pretty well on their own.
that's good to hear.
Yeah.
But I did notice while going through their standalone financials, a section discussing Resolution Framework 1 and Resolution Framework 2 for COVID-19 related stress.
Right.
Does that mean they ran into some trouble during the pandemic?
Not necessarily.
Okay.
These frameworks were actually set up by the Reserve Bank of India to help financial institutions deal with, the fallout from the pandemic.
Right, because so many borrowers were struggling.
Exactly. A lot of people were having trouble repaying the loans.
Yeah.
Businesses were disrupted. So these frameworks were designed to offer some relief.
Got it.
So L&T Finance Limited's report shows that they used these frameworks, which suggests they were proactive in trying to help borrowers navigate those tough times.
So they were trying to work with people.
Yeah, they were trying to be helpful.
Instead of just, taking their money.
It shows they understand that real-world events can have a big impact, even on financial reports.
Yeah, for sure. And it makes you realize that these aren't just...
They're not just numbers.
abstract figures.
They're connected to real things.
Yeah, it's reflecting what was happening in the world.
Exactly.
All right, so now let's move on to another crucial aspect of financial performance.
Let's do it.
And that is cash flow.
Cash flow is like the lifeblood of a company.
What do you mean by that?
Well, it shows the actual movement of money.
Okay.
Where's it coming from? Where's it going?
So like their bank account activity, but on a much bigger scale.
Yeah, exactly. A much more complex scale.
And what does L&T's cash flow statement tell us?
All right, let's take a look.
One thing that immediately stands out to me is a pretty significant cash outflow from operating activities. 9,487.78 crore.
Okay.
Should we be worried about this?
Well, not necessarily. For financial companies like L&T, big cash outflows from operating activities are actually pretty common.
Really?
Especially for companies that do a lot of lending.
Okay.
Remember, they're using cash to fund those loans.
Right.
And as their lending portfolio grows, we'd expect that outflow to increase too.
Okay, so it's not necessarily a bad thing.
Not at all.
It's just part of how they do business.
Exactly.
But they also have a strong inflow from investing activities.
That's a good sign.
Okay.
It could mean they're making strategic investments in new assets or securities.
Oh, I see.
Which could lead to more growth and profit down the road.
So they're kind of planting seeds for the future.
Yeah.
Okay, so we've looked at cash flow.
We have.
We've seen how they're generating revenue, managing expenses, navigating the complexities of cash flow.
All those moving parts.
But before we move on, let's talk about the watchdogs of the financial world.
Well, yeah, the auditors.
The auditors?
Important, though.
Yeah, so in L&T's case, both the consolidated and standalone auditors' reports contain what they call unmodified conclusions.
Right.
Now, that sounds like a good thing.
It is a good thing.
Okay.
An unmodified conclusion means that the auditors didn't find any major problems with the financial statements.
So they're basically saying everything looks good.
Pretty much.
Okay. That's a relief.
Yeah, it gives stakeholders confidence in the information that's being presented.
Okay, great. So that's good news.
Yeah, that's a good sign.
But there's one more report I'm kind of curious about.
Okay, which one is that?
The one from T.R. Chaha and Co. LLP.
Ah, yes.
What's the purpose of that report?
So that report is all about L&T Finance Limited's outstanding listed non-convertible debentures.
Okay.
Or NCDs, as they're often called.
NCDs, okay.
And it confirms that the company has met what's called the security cover requirements.
So remind me again, what is security cover?
Sure. So remember earlier when we talked about L&T needing enough assets to back up the value of their outstanding NCDs?
Yeah.
That's basically what security cover is.
Okay. So it's like collateral for a loan.
Exactly. It's a way to protect the investors who have put money into those NCDs.
Okay. And this report confirms they met those requirements.
Yes, it does.
Okay.
And it actually goes a step further.
Really? How so?
It also looks at their compliance with what are called financial covenants.
And what are financial covenants?
So these are essentially promises that L&T makes to their NCD investors to make sure they're managing their finances responsibly.
So it's like a way of saying,
right,
we're going to keep our finances in good shape.
Exactly.
So you don't have to worry about lending us money.
Yeah. It's all about building trust and transparency.
Okay. And these covenants cover lots of different things, right?
Yeah. They cover a bunch of financial metrics.
Okay.
Things like debt ratios, profitability levels,
liquidity. So basically, it's making sure that they're healthy.
Exactly. They're indicators of overall financial health.
All right. And according to the report, they are keeping those promises.
Yes, they are.
Okay, that's good.
The report confirms that L&T Finance Ltd is in compliance with all the financial covenants.
That's a good sign.
Yeah, it's a good signal to investors that they're managing their debt responsibly.
Okay, great. So it sounds like...
So far, so good.
They're doing a good job.
Yeah, seems like they're ticking all the right boxes.
Yeah, they're diversifying their funding sources, meeting their obligations to investors, and demonstrating a commitment to responsible financial manament.
It's a good story so far.
Yeah, I'm impressed.
Yeah, it's been a fascinating journey, hasn't it?
It really has.
We started with this stack of kind of scary financial documents.
Right.
And now we're starting to get a clearer picture of L&T Finance Ltd.
Yeah, I'm feeling much more informed than I did when we started.
That's the goal.
Yeah, for sure. And thanks to you.
Oh, you're welcome.
I feel like I actually understand these reports a little bit better.
That's what I like to hear.
Yeah, even with all the complexities.
It's a puzzle.
Yeah.
And all the jargon.
Well, we're putting the pieces together.
Yeah, and I'm starting to realize that these reports can tell a story.
Absolutely.
About a company.
Like a financial novel.
Yeah, and the story of L&T Finance Ltd, at least for this period, seems to be a positive one.
Yeah, it does.
It's a story of growth. And resilience.
Resilience.
And responsible management.
That's right.
You know, they faced the challenges of the pandemic.
The global pandemic.
And they managed to stay profitable.
Yeah, they did.
And they're showing a commitment to transparency.
It's all good signs.
Yeah. It's really cool how, even in the world of finance, there's a human story there.
There is a human element.
It's not just about numbers.
Right.
It's about the people behind the numbers.
Exactly.
The decisions that they make and the impact that those decisions have on the company, on the investors, and even on the broader economy.
Yeah, it all connects.
It's fascinating.
Yeah, it's a big web.
So we've got this snapshot of L&T's performance.
Right at this moment in time.
At this moment in time.
Yeah.
But the financial world is always changing.
Always evolving.
So it'll be interesting to see how they adapt to future challenges.
Definitely. It'll be interesting to watch how their story unfolds.
Yeah. And of course, we'll be here to help decode those stories.
We'll be here to break it all down.
Oh, as they unfold.
Well, that's our job.
Yeah. All right. So I can't wait.
Me neither.
This has been a real eye-opener.
Yeah, I've learned a lot, too.
Who knew finance could be so intriguing?
It can be quite a ride.
All right. So until next time, deep divers.
Stay curious.
Keep exploring.
Keep learning.
Keep learning. And remember, what's the saying?
Knowledge is power.
That's the one.
That's right. Knowledge is power.
All right. Until next time.
See you later. Okay, so we're back and ready to dive even deeper.
Let's do it.
Into these financial statements. We've covered a lot of ground already.
We have?
But I'm ready to learn even more about how L&T Finance Ltd operates.
Right.
Where should we go next?
Well, I think a good place to start would be to take a closer look at the breakdown of their revenue.
Okay.
You know, we know the total figure is pretty impressive.
Yeah, over $1 billion.
Over $1 billion in just 6 months.
Yeah.
But, you know, figuring out where that revenue comes from can really give us some insight into their business strategy.
Okay, so let's unpack that.
So do it.
What are the primary sources of revenue for L&T?
So the biggest chunk comes from interest income.
Okay.
They brought in a whopping 7,107.03 crore.
Wow.
For the 6 months ending September 30th, 2024, which shouldn't be too surprising because their core business is lending money and earning interest on those loans.
That's their bread and butter.
Exactly. It's what they do.
So they're making good money.
Yeah, it's doing well.
From the interest they charge on loans?
Right.
But what else is contributing to their revenue?
Besides that, they also generate revenue from fees and commissions.
Okay.
Which came in at 579.74 crore.
Okay.
Now, that's obviously much smaller.
Right.
Compared to that big interest income number.
Yeah.
But it does tell us that they're offering more than just loans.
So maybe some additional financial services?
Exactly.
Like advisory services or something?
Yeah, think about things like advisory services, maybe loan processing fees, other value-added services.
Okay, so they're diversifying their offerings beyond lending.
Yeah.
Which is a smart move.
It's like not putting all your eggs in one basket.
Yeah.
Diversification can really help reduce risks.
Right.
Because if one part of their business slows down, they've got other revenue streams to fall back on.
It's good to have a backup.
Exactly.
So that's a sign of a healthy business.
Yeah, it shows they're adaptable.
Yeah. Now, there's a smaller item on the revenue list.
Okay.
Caught my eye.
All right.
Net gain on fair value changes.
Okay.
116.57 crore.
Not a huge amount.
Yeah, it's not a huge amount, but I don't really understand what it means.
Right. So it can sound a bit confusing.
Yeah.
Basically, it has to do with the changing values of certain assets that they hold.
Okay.
So imagine this.
Yeah.
L&T invests in another company.
Okay.
And the value of that company's shares goes up. They would record that as a gain.
Okay.
And if the value goes down, they record a loss.
Right.
So this net gain basically means that overall, the value of some of their assets has increased.
So it's like a bonus?
Yeah, kind of like a little bonus.
On top of their regular revenue.
Exactly.
It's cool how many different factors can affect a company's.
Yeah, it's complex financial performance.
There are a lot of moving parts.
Okay, so let's switch gears again and talk about the other side of the coin.
The expenses.
Expenses.
Right.
We've already talked about finance costs.
We have.
Which are a big expense for them.
A major expense.
But what other big expenses are they dealing with?
Well, another significant expense is that impairment on financial instruments.
Right.
Which we talked about a bit earlier.
Yeah, the potential losses on loans.
Exactly.
Okay.
And for this period, it comes to 940.69 crore.
Okay, and we know that a rising impairment charge can be something to watch out for.
Definitely something to keep an eye on.
Okay, how about employee benefits?
Oh, okay.
I see that's a big expense as well.
It is 1,068.12 crore.
So employee benefits cover all the costs associated with their workforce. So we're talking about salaries benefits, even stock-based compensation.
It's a big part of any business.
Huge.
But especially in finance.
Especially in finance.
Where you need those skilled employees.
You need the best people.
And you got to pay for them.
You got to attract them and keep them.
Yeah.
And that costs money.
It makes sense.
It's a competitive industry.
Okay, now there's a pretty large category here called other expenses.
Yeah.
793.56 crore.
That's a big bucket.
What exactly falls under that category?
It's kind of a catch-all term.
Okay.
For all the operational costs that don't fit neatly into the other categories.
So like rent, utilities, that kind of stuff?
Exactly. Think about things like rent, utilities, professional fees, marketing.
So it's the miscellaneous category.
Yeah, basically everything else.
All right, I guess it helps keep things organized.
It simplifies things.
All right, so we've explored their revenue streams, their major expenses. What else should we look at?
Well, I think we should dive into the notes that go along with these statements.
Okay.
You know, they often get overlooked, but those notes can be a goldmine of information.
Really?
Yeah.
Okay, so lead the way.
Let's do it.
Let's see what we can find.
Let's uncover those hidden gems.
All right, so what's catching your eye?
Okay, so one note I found particularly interesting was about L&T Finance Ltd's participation in those Reserve Bank of India's resolution frameworks for COVID-19 related stress.
Yeah, the programs to help borrowers affected by the pandemic.
Exactly.
Okay.
And, you know, we touched on this earlier, but the notes actually provide more details.
Okay, what kind of details?
Well, for example, they highlight their exposure to personal loans and corporate loans that slipped into what are called non-performing assets.
Non-performing assets.
Or NPAs during that period.
NPAs, what are those?
So NPAs are basically loans that have gone bad, they're loans where the borrower hasn't made payments
Oh, I see.
for a long time.
They're not paying back the loan.
Right, they're not paying it back.
Okay.
And these NPAs can be risky for lenders.
Right.
Because they might not ever get that money back.
So it's like a money that's stuck.
Exactly. It's a big problem.
So by offering relief through those COVID-19 frameworks, L&T was trying to prevent of those struggling loans from becoming NPAs.
They were being proactive.
That's good.
Trying to manage those risks.
Yeah.
It's a good example of how those notes can give us a peek behind the curtain of what was happening during the pandemic.
Yeah, and how they were dealing with it.
Exactly.
It's amazing how much detail
it is.
These notes can reveal.
Yeah, you can really get a deeper understanding of their financial health and how they manage risk.
So what other interesting things can we find in these notes?
There's another note that talks about L&T Finance Ltd's capital adequacy ratio.
Okay, now what is a capital adequacy ratio?
It's a super important metric for financial institutions.
Okay, but what does it actually mean?
Okay, so imagine a company is like a ship sailing through rough seas.
All right, I'm with you.
The capital adequacy ratio is like the ship's hull.
Okay.
It determines how well the ship can handle those rough waters.
Okay.
How resistant it is to capsizing.
I like that analogy.
So a higher ratio means a stronger hull.
Okay.
Which means they're better able to handle.
So if the ratio is higher, that means they can handle losses.
Exactly.
And financial challenges better.
They're more prepared.
Okay.
And the good news is L&T Finance Ltd's ratio is well above the regulatory requirement.
Okay, so they're in good shape.
Yeah, they're well capitalized.
Okay.
Which means they're ready to face those unexpected challenges.
That's reassuring.
It is.
Okay, so what else?
Let's talk about their strategy
for
managing what's called liquidity risk.
What is liquidity risk?
Liquidity is all about having enough cash on hand to meet those short-term obligations.
So like having enough money in your checking account to pay your bills.
To cover those day-to-day expenses.
But for a company like L&T, managing liquidity must be pretty complex.
It's a big job.
So how do they do it?
Well, the notes outline their diversified funding sources.
Okay.
Which include things like bank borrowings.
Okay.
Debenture issuances, commercial paper.
So they're not relying on just one source of funding.
Exactly. They're spreading it out,
Okay.
which reduces their risk.
Makes sense.
It's like having multiple backup generators.
That's a good way to put it.
Just in case one fails.
Okay, so they've got a plan
They do.
to manage their cash flow
They're on top of it.
and make sure they can pay their bills.
It seems like it.
I'm starting to understand why these financial reports are so important.
They're important.
They really do give you a glimpse into how a company operates.
Absolutely.
And they provide valuable clues about their financial health.
And their strategy.
And their strategies.
Right. How do they handle challenges?
You're right. It's like piecing together a puzzle.
It is.
With all these little pieces of information.
And sometimes the most interesting pieces
Yeah.
are hidden in those little details.
Right.
In the notes and disclosures.
I'm glad you're here to guide me.
I'm happy to help.
Through this financial maze.
It's a journey.
It is.
But we're in it together.
But I'm sure there's still more to uncover.
Oh, there's always more.
So what awaits us?
All right. So in the final part of our deep dive, we're going to explore some specific aspects of their operations.
Okay.
We'll talk more about those non-convertible debentures.
Okay.
And the compliance requirements.
Okay.
And we'll also touch on the auditor's opinions.
All right.
And what they tell us about the reliability of these financial statements.
Okay.
It's going to be an exciting finish.
Can't wait. Okay, so we've really gone through a lot with L&T Finance Ltd.
We have.
Their revenue streams, expenses, cash flow. We even dug into those notes.
Yeah, those notes were pretty interesting.
Yeah, there was a lot of good information in there.
A lot of hidden gems.
But before we wrap up,
I
want to talk about one more thing.
All right, what's that?
These non-convertible debentures, or NCDs.
Oh, yes, the NCDs.
They keep coming up.
They do.
And I'm still not totally sure what they are or why they're so important.
All right. Well, you're right to focus on NCDs.
Okay.
They're definitely a key part of L&T's financial strategy.
Okay.
And remember earlier when we talked about diversification?
Yeah, not putting all your eggs in one basket.
Exactly.
Okay.
Well, NCDs are part of that.
Okay. How so?
They give L&T a way to raise money from the public.
Okay.
So they're not just relying on bank loans.
Oh, I see.
They're broadening their funding sources.
So it's like instead of going to one bank for a big loan, they're getting smaller loans from lots of different people.
That's a good way to think about it.
Okay.
People who buy these NCDs are essentially lending money to L&T for a certain amount of time at a fixed interest rate.
Okay, and what makes them non-convertible?
So unlike shares, these NCDs don't turn into equity.
Okay.
So the investors don't actually become owners in the company.
So they're just lenders.
Exactly.
Okay, so why are we talking about them now?
Well, remember that report from TR Chad & Co. LLP?
Yeah, the one that said L&T met certain requirements?
Exactly. That report focused on NCDs.
Okay.
It's all about giving investors confidence that L&T Finance Ltd is handling these NCDs responsibly.
Right, and that comes back to security cover, right?
Got it.
Making sure they have enough assets.
Yeah, they need enough assets to back up
to cover those NCDs.
Value of their outstanding NCDs.
Okay.
It's like that collateral for a loan.
Right, it protects the investors. And the report said that L&T is meeting those requirements.
They are.
Okay.
And it actually goes a step further.
Oh, really?
Yeah, it also looks at their compliance with what are called financial covenants.
Okay. And remind me again, what are financial covenants?
They're basically promises that L&T makes to its NCD investors.
Okay.
It's a way of saying, hey, we're going to manage our finances well.
So the investors don't have to worry.
Exactly.
Okay. And what kind of promises?
So these covenants, they cover all sorts of things.
Like what?
Things like debt ratios, profitability levels, liquidity.
So basically making sure they're healthy.
Yeah, making sure they're in good financial shape.
Okay. And the report said that L&T is keeping those promises.
They are.
Okay, that's good.
They're in compliance.
So they're diversifying their funding, meeting their obligations to investors, and just generally being responsible.
They're checking all the boxes.
I'm impressed.
Me too.
This has been a really fascinating look.
It has been.
At L&T Finance Ltd.
Yeah, we've gone from these intimidating financial statements
all this jargon
to a much clearer understanding of how they operate.
And I feel like I've learned a lot about how to read these reports.
That's what we're here for.
And it's really cool how these reports tell a story about a company.
Yeah, they're not just numbers.
And in this case, the story seems to be a positive one.
Yeah, it does.
You know, they faced challenges.
Yeah, they do.
But they've stayed profitable.
They have.
And they're committed to transparency.
And responsible management.
It's a good reminder that even in finance, there's a human element.
There is.
It's not just about numbers.
It's about people making decisions.
Exactly. And those decisions have an impact.
On everyone.
On the company, on investors, on the whole economy.
Yeah, it's a big web.
So we've got this snapshot of L&T's performance.
A glimpse into their world.
But things are always changing.
The financial world never stands still.
So it'll be interesting to see how they adapt and what happens next.
Absolutely.
And of course,
we'll be here always
to help you understand it all.
That's our job.
Well, this has been a real eye-opener.
It's been fun.
Who knew finance could be so interesting?
You never know what you'll find. All right, well, that's it for this deep dive.
Thanks for joining us.
Thanks for listening, everybody. Until next time.
Keep learning.